Nvidia reported full year 2024 results on February 21st. Driven by the better-than-expected earnings, the darling of the AI industry reached the $2 trillion market cap on the news. After our analysis and rating for Nvidia, we will present a discounted cash flow model at the end. Amplified by a decline in annual revenue in 2023, 2024 revenue was up 126% to nearly $61 billion year over year. Gross margins improved from 57% in 2023 to 72.7% in the latest full-year report. Operating income was $33 billion, up 680% or around 54% of total revenue. The bottom line was almost $30 billion, up 581%. At the time of this report, market cap stands at $1.97 trillion, which is 66 times net income. Moving to the 5-year income statement highlights, we can see in 2023 revenue contracted with respect to 2022, making this year's reporting figures look exceptional. 5-year net revenue grew at a compound annual growth rate of 41% and 31% on a 3-year basis. Gross profits have been growing at 45.5% and 36% in the last 5 and 3-year periods respectively. Operating profits expanded by 63% in the 5-year period and 49% in the 3-year. Finally, Nvidia's net income has been growing at a 60% rate since 2022 and 45% since 2022. Impressive growth for a video game graphics card maker. Like and subscribe to the channel if you could. Nvidia is no longer just a graphics card maker, as the revenue by business reveals. The data is a bit messy, but the key takeaway from fiscal 2024 is that Nvidia's data center business line exploded this past year to deliver $47.5 billion of total sales, up from $15 billion in 2023. This is where the seed of the artificial intelligence industry has been incubating, growing at a 74% clip in the last 5 years. The gaming segment, where the video cards are produced, has had much slower growth of just 13.6% from 2022 and even contracting 5.7% since 2022, earning $10.5 billion. The professional visualization business has also been struggling, down from its peak in 2022 of $2.1 billion to end 2024 at $1.55 billion. The automotive business has been growing, though, at $1.1 billion, makes up only 1.5% of total revenue. The OEM and other business at just $306 million is Nvidia's worst performing segment. The USA is the largest geography in Nvidia sales, driving AI sales to $27 billion. Growth has been an impressive 98% in the last 5 years. Taiwan revenue jumped to $13.4 billion from $7 billion year over year as the second best performing market, where it has been growing at 35%. China has also had a strong showing, nearly doubling to $10.3 billion in 2024, expanding by 30%. The rest of the world has had mixed results, as the video card business has been stalling, but finishing 2024 at $10.2 billion. Seems everyone is jumping on the AI bandwagon. Let's take a look at some ratios. Shares outstanding were down by 13 million. Earnings per share were nearly $12, up 585% year over year. Sales per share jumped 127% to $24.40. Cash per share was $10.42, better by almost 100%. Book value too was better by almost 100% to $17.23. Nvidia has a PE of 66.28, where the rest of the S&P 500 is only 27.51. PE growth is only 0.11. Leverage ratios look good, with the debt ratio at 0.13 and debt to equity at 0.2. Both improved as long-term debt decreased by $1.2 billion. Interest coverage is well serviced with 38 times. Accounts receivable jumped 150% and cash by 100%, giving us a current ratio of 4.17, a quick ratio of 3.38, and a cash ratio of 2.44. These numbers, while indicating no liquidity problems, suggest that capital is underemployed. All the return on ratios look good. Return on assets at 45%, return on equity at 69%, and return on capital employed showing 60%, with return on invested capital reporting 55.7%. The cash flow data look good. Operating cash flow was up 400% to $28 billion. Investing outflows were $10.6 billion, primarily driven by the share repurchases. Financing outflows of $13.6 billion, largely due to share buybacks and repurchasing of the previously mentioned long-term debt, with free cash flow to the firm at $7.3 billion. Nvidia paid 16 cents in dividends, yielding 0.02%. Enterprise value is just shy of $2 trillion. That is 32 times revenue, 44 times EBITDA, and 268 times free cash flow. Nvidia's first quarter 2025 guidance to us look like growth is slowing. They indicate revenue would be $24 billion, great on a year-over-year basis, but only 9% quarter-over-quarter. Net income is expected to only improve by 2.2%. Are they downplaying expectations? Forward PE based on their guidance is 38.54. Key takeaways from the report on the pro side show good cash flow, great margins, operating expense barely grew year over year, demonstrating management's ability to leverage the business, and Nvidia is in a growth industry. On the con side, PE is obviously quite high, as well as enterprise value valuations. Short-term liquidity ratios seem to indicate underutilized assets, and their guidance for Q1 2025 seems lackluster. That being said, we're giving a neutral rating to Nvidia. We have no exposure to this company. Turning to our discounted cash flow model for Nvidia, we came to a share price of $614. That is down 22% from the current share price and is a PE of 51.42. Looking at our assumptions, we used 7% for growth rate based on a McKinsey article, The Semiconductor Decade, a $1 trillion industry. Others are indicating that the AI industry will grow by more than 30% until 2030. You can decide. We used the capital asset pricing model to come up with a weighted average cost of capital of 12%. The 2-year average of Nvidia's tax rate was just 4%. The risk-free rate is the 10-year treasury yield, and Nvidia's beta is 1.72. Our 5-year revenue estimates to 2029 used a compound annual growth rate of 41%, as previously indicated earlier. Cost of goods sold was 36.2%. Operating expenses 29.2%, with a tax rate of 4.1%. Depreciation and amortization was 40.4% of beginning property, plant, and equipment, and capital expenditure of 36.9% of beginning PPE. Net working capital data we used was the 4-year average from 2021 to 2024, which we used from 2025 to 2029. We plug those assumptions in to get our unlevered free cash flow numbers to arrive at $614. Like and subscribe.